Success is created by doing the basics to a high standard consistently. Thibaut. Thibaut hits the nail on the head. Doing the basics, that is following the charts. We have simple charts for you to follow each and every day. 10 to 15 minutes is all we ask. Stay motivated. You can do this. It will take some time and energy, so focus every day to a high standard. And you want to make that standard even better, fill out your daily market worksheets, at least your weekly market worksheets, and for every practice trade, the trade worksheet. They're all in your show notes. Go to chartingwealth.com, sign up for free to our emails. We see stocks are up, rebounding for the day. Gold and bonds down a little bit. Let's jump first into stocks. We see the S&P 500 where we always start. We have, again, what do we have the week starting off? We got a green spinning top, solid green, which means as far as the Heikin Ashi candlesticks, it's not a green up candle. It's a solid green candle, similar to a solid red, means it's a slowing down in the going down. We see that the price percent oscillator is crossing over going down. Now, that's important for you to note. It's a brand new week. We're not saying that the week is going to end up this way. If it's up all week, it won't. But look at that. The price percent oscillator, even with an up day, 0.74%, still enough oscillation, enough pressure to, at this point, the end of the market on a Monday, to be pushing the price percent oscillator through the red signal line. That's a big deal. May not stay that way. It's just that way the first day of the latest 5-day candle. Derivative oscillator, also negative. Now, we go to the 2-day chart. Now remember, the prior 2-day chart was Wednesday and Thursday, prior candle. This candle represents Friday and Monday. And look at it. It's a strong down candle with a long wick on the bottom, sitting right there on the weekly trend line. Derivative oscillator gaining downward momentum. Lots of it. Price percent oscillator spiking over, going down. So there's lots of downward pressure on this market, despite the fact that Monday was an up day. All that stuff going on in China, you name it. Now look at what we're seeing on the 4-hour chart. We're seeing a sideways slide. Derivative oscillator, still negative, losing a little bit of negative energy both in the morning and afternoon. That price percent oscillator still down. And basically we have lots of indecision on those candlesticks. So keep in mind all that downward pressure, despite the fact it was up for the day. We're looking at our candles, okay? Important. Now, we're looking at our indicators. We're looking at the price percent oscillators. We're looking at all the charts all the time. The important stuff you have to keep in mind. Now we leave the S&P 500, go to the Nasdaq 100. Little different. Up about double, more than double, what the S&P was, up 1.51%. Big rebound. However, that is tempered. Look at the high on the market back on the week ending the 24th of January, 225.88. Where are we on Monday? 222.89. Not that gigantic a rebound. Price percent oscillator is heading sideways, pretty much just flat. Derivative oscillator still losing momentum. That's on the weekly chart. Go to the 2-day. What do we see there? We see on that 2-day chart not a really good 2-day trend line. It's just hard to draw one. It's not a good, almost don't pay attention to the trend line, but we just don't have a good one to draw. You know what I'm going to do? I can redraw one later. We don't have a trend line on the 2-day chart at this point. What do we see though? We saw when we had that 2-day crossover on Thursday, it was a green open box spinning top, meaning indecision tending up. Now we have a red open box. Again, indecision tending not as much up, we would say. But look at what's happening. Derivative oscillator gaining downward momentum's turned red, and the price percent oscillator heading down after that crossover back on Thursday. So again, keep that in mind. We see what's going on that smaller chart. Of course, we see on the 4-hour chart, lots of up movement in the afternoon, after some up movement in the morning, hitting the high in the morning. So again, Hasn't crossed over going up yet. We'll keep our eye on things. We'll see how Tuesday and Wednesday play out. Again, with the coronavirus and all that stuff going on in China, market's doing just the opposite of what you thought it would, isn't it? Well, it is in the short term. Continue to watch, see what there is to see. Don't be fooled by what you hear in the news. We keep saying that. Pay attention to these charts and remember where they are and what's going on. Again, we're seeing much more downward pressure on the S&P than we are on the Nasdaq 100. So we'll continue to watch, see what there is to see. And if we do have a weekly vertical crossover going down on the S&P by the end of the week, we'll let you know. If not, we don't. So we'll be watching. I'm going to leave stocks, go to bonds. Bonds down for the day 0.25%, 0.25%. Now remember, we had that weekly vertical crossover on Friday, didn't we? We did. And we look at that and we can see that we reached higher highs in the prior week, 145.99. So far this week, 145.76. Well, that's not too far off, is it? And we see we have a green up candle that is still forming, going up. Again, down for the day 0.25%. Derivative oscillator gaining upward momentum. Price percent oscillator still heading up. Still heading up. So we'll continue to keep our eye on things despite that down day on Monday. Look at the 2-day chart. High 145.99. Prior 2-day chart 145.67. So that 2-day candle moving up just like it has been for the prior 3 weeks. Price percent oscillator not changed a wick. Derivative oscillator gaining upward momentum. We go to that 4-hour chart. We can see down movement in the morning, a little bit of recovery in the afternoon, not reaching a higher high as it did on Friday where it hit its high, but we'll just continue to watch, see what there is to see, my friends. Derivative oscillator hasn't crossed over going down. Price percent, derivative oscillator's not crossed over going down. Price percent oscillator hasn't either. Going sideways, maybe burning off a little bit of energy, but we'll continue to watch, pay attention to those bigger charts, the weekly and the 2-day in particular, and see how that weekly vertical crossover is going to go for us as we go throughout the course of the week. As always, of course, you have your loss bands in there, your loss band or bands, typically one loss band, maybe 1, 2, or 3 profit bands. We'll continue to watch that. If you've not gotten that training, I'll put that out later in the week for you. We do have a great training today. Weekly vertical crossovers for slam dunks in your practice trading. Want you to get that. It's in your show notes today. Spend a few minutes listening to that. Now we go to gold. Gold down for the day 0.65%. Starting the week off with some slowing on that weekly chart. Price is still well above the weekly trend line. And, we're going to have to redraw that trend line. That is way back in time. We're going to draw that a little bit closer. We want to try to connect 3 candles if we can. And there we go. That's probably the best we're going to get right now. But what we see is, yes, price is still above the weekly. We see it's flattening some on that weekly chart, and the derivative, as far as the price percent oscillator goes, derivative oscillator losing some momentum. Red open box candle is slowing down in the up movement. That 2-day chart, a little less than flat. We see the latest 2-day candle, green open box with a wick on top, hitting a higher high, 149.68. 149.31 on that prior 2-day candle representing Wednesday and Thursday of last week. So we see that the price percent oscillator is maybe a little less than flat. Again, it's weak. We've continued to see there be some price build, but do keep a close eye on that 2-day chart and that 2-day trend line. That derivative oscillator is getting close to crossing over, going down, so just watch. We've had a great trade in gold so far, so don't lose what you've earned, but watch, pay close attention. And of course, you can take your profits when you feel like it, and you can always look to get back in. Look at that 4-hour chart rotating over, going down, a lot of down movement in the morning, some recovery in the afternoon, And again, we do see a solid red down candle in the morning and a solid green in the afternoon, so a slowdown in the move down. But we see that price percent oscillator on the 4-hour chart crossed over going down, that derivative oscillator gaining downward momentum. So we'll watch, see what there is to see, still above the 2-day trend line, well above the weekly. So we'll watch and see if gold makes a recovery or if it's run out of its steam. Again, we'll let these charts lead us. Folks, that's where we are as we end the day. Hey, thank you for all the recent orders of the book, Charting Your Way to Wealth. We'd sure love to send you a copy. We have autographed copies available for you, and we will get them off to you. If you happen to live overseas, guess what you do? You email us, cw@chartingwealth.com. Tell us you want the book. We'll send you a PayPal invoice. Pay that. We'll send your book to you wherever you are in the world. For the rest of you here in the States, follow the link in the show notes. Square, our Square account, will be happy to take your credit card and we'll send you a hard copy of our spiral-bound book, Charting Your Way to Wealth. It explains what we do here, why, how, who, what, when, where. It's all about it in the book. We love to hear from you, cw@chartingwealth.com. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.